Hello everybody, this is Craig Bennett, the founder and owner of Tech Reviews and Help, and today I'm going to get a little more into the stock market, and I'm going to tell you how to read charts, how to I'm going to tell you a little bit more on my first video didn't get into. And one of the things that my first video left off on is options and commodities and futures. Now, I got into the longing and shorting, which is a regular stock market, but I don't do it with too many options. Options, it can vary. It can be very complicated or it can be very simple. From my experience in options, it's pretty much like the regular stock market. It's I'm not really the best person to ask on this, but it's my experience is just pretty much if you learn to deal with the regular stock market, everything else, I don't care if it's commodities, I don't care if it's options, it's pretty much the same. Now options, you got a little more flair to it, I guess you could say. You deal with 100 stacks of stocks. You deal with you can get penalized a little heftier. There's a lot of unknown variables, and I'm not talking about unknown variables of what the price is going to be tomorrow. I'm talking about what the next person who buys the option from you, what they're going to do, because that actually directly relates to, and what they do can actually penalize you, and that's why I virtually refuse to deal with options. And on top of that, I get enough money and experience from regular stocks, just like everybody else. Indexes, there's a law saying that if you have to be considered as a full-time trader, you got to have $25,000 in your investment accounts, and you must trade a few times every so often. Well, you can trade a few times every so often, but if you do that and you don't have that $25,000, you get penalized. It's up to the brokerage firm to do whatever, but my experience is you can get a 90-day probation period where they remove your margin account access, and I have had that happen before unknowingly. And one of the things I don't like about Scottrade is the guy who I dealt with. I asked him a question directly related to figuring out if I would break it's a 3-time thing, and I think that's up to each place. But from my experience, from most places, it's a 3-time thing where you mess up, then you get your account taken away for a little while, your margin account, and then you get switched to a regular account. And there was something I was asking. I think it was if I had a amount of stock, say if I got 100 shares, I buy 50 shares, I sell 100 shares immediately after I got the 50 shares, would that count against me? That guy told me no, and I did it, and it counted against me. And things like that you gotta watch out for. And if you got a question about that, even if you ask your local broker, ask me. Put it in the comments. Don't allow me to be the only one to see it, because someone else might be able to come around and answer you quicker than I can. And there's questions I flat out won't know the answer to. But if it's personal or whatnot, like say you got some personal detail that you're okay with me knowing but not some Joe Blow knowing, then go ahead and email. My email is on the Tech Reviews and Help site. Go to contact us, and my email's under that. Anyways, commodities are pretty much the same as everything else. And also there's something I forgot to mention is forexes. Forexes is foreign exchange stocks. It's say for example, we have, and what's shown here is currencies. this is technically a forex, but forex is also, um, say the Nike, Nike, or say T-Mobile Germany. I believe that's one of T-Mobile's biggest stocks. But T-Mobile Germany, that's forex. T-Mobile USA is not forex. You have to get the actual symbol right to get it. Most places won't allow you to trade forexes. It's very complicated. The place has to have certain licenses and so on. So they don't really deal with it. TD does, and there's a few other places that do, but it's a pain to keep track of that if you got a normal 9 to 5 job, because I mean it's one of those things you don't want to deal with, um, and worry about when you're about to go to work or when you're leaving work and checking your thing all the time. Now, then again, regular stock market is from 9:30 to 4 o'clock, so I mean it's up to you. In a general sense, forex is pretty much the same, but there is slight regulations against it. Currencies, it's a give or take. I look at it as betting on horses. Basically, you got Europe against the USD. USD is America. Um, I mean, it's pretty much you're either betting for one side, which is Europe on sell, or buying on the other side, which is for America. Um, it's a give or take. I could have had that backwards stuff if I did. Sorry, but it's I mean it's pretty much betting on horses. But the overall, let me see if I can pull up see if I can pull up this. Pull up a chart on this. I don't know if I can. Yep, yeah, I actually can. I mean, it looks the same, and it pretty much is the same as regular stocks. It's just a little different regulations and whatnot. In fact, this is probably a perfect area to show you some tricks of the trade. One of the biggest tricks that I use in stocks is trend lines. Trend lines I use all the time. It shows you the height of how high the stock will go and how low. Basically what you do is peak to peak to peak. So let's say this peak, that peak, that peak, or no, let's go there. Peak to peak to peak. And what it's saying is, for the most part, your stock would not go above this line. If it's hit 3 times, then this line is not really that good. But if it's hit 3 times, then it's a good line. If it's hit 2 times, it's a really good line. My saying is 2 times is a pattern, 3 times confirm it. That's what all that is. Now let's do channels. Let's get rid of this and do channels, which is, have I got the right thing selected? Yeah, I did. Now what's saying here is you got a peak to peak to peak. That's how high. And the lowest point is this. It's not exact science. You can go a little within, like right here, it's a little within. You can go a little more. So it's not exact science, but basically, if you put your money somewhere in the middle, more towards the middle, you've been okay. And if you're hoping that it way down here, that probably won't happen. If you're hoping it goes way up here, then that's probably not going to happen. At the max, it's going to be here. At the lows, it's going to be here. Obviously, it's not a 100% deal, but that's one of the best tools out there. Let me try to find another thing. In fact, let's go 5-day, and in fact, let's go with Apple. APL. Let's extend that out to 10 minutes. Now we're on the channel, so we got this one's not going to be too good. This is more for a bottom line channel. So I'm going to say right here is actually a good example on the bottom line. Basically, you'll know up here, in fact, right here is saying tomorrow. What was it today? Tomorrow, it might be good to sell. See right here, it's hitting the max channel line. You can see it's doing a 90-degree thing right there. Let's see if I can make it small. No, that's 1 minute. But as far as, let's say, a 10-day full, it will not go below this right here. So if you bet between here and here, more preferably in the middle, you're safe, as long as you're in the upward trend line. If you're in the downward trend line, which does happen, and let me try to find a stock that has a downward. Let's see, oh, there it is, quick chart. See right here is a good one. FAZ. This is a good downward trend line. And I believe this is a day. So we're going to look at a daytime, and this is definitely a downward trend line. And what you would do is you would hit here. Now, again, this is not 100%. It sometimes breaks out. If it breaks out, the trend's not 100% good, but it's best to keep it anyways, just to see what will happen. And on here, what it's saying is it's hit here, hit here, hit here. It's going. You can see where it's hit all the way in that line, and it's hit the same, just about the same place, all the way on that line. And this jump out happens sometimes, but it's saying something's going to happen very shortly, which did. It stabled out, and it's going to go down. And because it's a downward breakout, it means it's going to go to the crapper shortly. This doesn't really look like a dead cap drop. In fact, I'll explain some of this on the next video. So go look for part 2, or go to the site where it's all listed together.